Bitcoin's quick retrace back up to 92K today didn't just erase the panic from yesterday's flash crash, it exposed something far more interesting underneath this market. Vanguard, the $11 trillion fortress of conservatism, just opened the floodgates to Bitcoin ETFs after blocking them for years. Bank of America's $2 trillion private bank quietly raised its allocation range to 4%. And all of this lands on the exact day QT officially ends. The same week Wall Street rolls out new Bitcoin structured notes, and the pressure that's been forcing this market lower suddenly evaporates. So did we just witness the end of the shakeout? Meanwhile, two of the most influential technologists on the planet, Elon Musk and Jensen Huang, described money, energy, and Bitcoin in ways that reveal exactly where the future is headed, whether they realize it or not. Welcome to No Second Best, the show where conviction meets reality and reality points straight to Bitcoin. I'm your host, Hurley. Now let's get into it. Last week, we saw Bitcoin rip to 93K heading into the weekend, only to evaporate in a sudden dump down to 84K early Monday morning. Well, I hope you bought the Cyber Monday sale yesterday, because less than 24 hours later, we saw a full retrace right back up to 92K. And when we zoom out and look at the macro, we can see that this wasn't caused by bad news. It wasn't triggered by a hack. It was mechanical. The month flipped, a new week opened, and the quarter reset all at once. Algos kicked in at the UTC close, hedges rolled over, inventories shifted, and the models moved from late summer liquidity to December liquidity in a single candle. On top of that, we had a light unwind of the Japanese carry trade. Nothing like the blowout events we saw earlier this year, but enough to push over-levered positions into forced selling. When the yen strengthens, the math breaks. And when the math breaks, the selling is automatic, not emotional. But every time this forced unwind happens, someone is standing on the other side quietly buying in large quantities. We're going to get into why that matters, especially in a global energy context, a bit later in the show. But first, let's connect the dots from the November shakeout. We had the MSCI memo, the JP Morgan MSTR delisting scare, sudden stablecoin depeg fears, all seemingly weaponized at the exact moment Bitcoin rolled over from the highs. And fast forward a week later, Vanguard caves. After 15 years of blocking their clients from touching Bitcoin, they finally flipped the switch. And this was no small shift. Here's Vanguard's own CEO, Tim Buckley, just last year on not allowing customers to buy the Bitcoin ETF.
Spot Bitcoin ETFs. Question came in, hey, we know you're not offering one. Have you changed your mind? What would it take for you to change your mind? We don't plan to, and we're not going to change our minds around this.
Never say never, Tim. But what's even more interesting about this 180 pivot is the timing. Immediately following several violent leverage flushes, a full sentiment reset, weak hands capitulating, and price sitting at a significant discount. And then Vanguard, a firm that already owns large stakes in Strategy and other Bitcoin-exposed equities, suddenly decides it's time to let their $11 trillion client base buy spot Bitcoin ETFs. Now, I don't know about you, but I don't really believe in coincidences. And it wasn't just them. Bank of America's private bank and wealth management group, which represents over $2 trillion in AUM, updated their internal guidance just today. Advisors can now allocate up to 4% Bitcoin for clients starting in January. I guess this is what happens when BlackRock's IBIT becomes their number one revenue generator in under 2 years. The incentives tell the whole story. The rest of Wall Street can't afford to stay on the sidelines. Not when the fee engine is this strong. And the reaction today proved it. The moment US markets opened on the first day after Vanguard lifted their ban, Bitcoin instantly jumped nearly 6%. IBIT did nearly $1 billion in volume in the first 30 minutes. I guess even the most conservative investors like a little hot sauce in their portfolio. We also can't ignore the macro timing. Quantitative tightening officially ends today. Rate cut odds for next week are rising fast. Goldman and JP Morgan are suddenly offering strategy-like structured Bitcoin notes. And the Bitcoin chart is sitting on multi-year support that looks identical to every pre-expansion setup we've ever seen. Put this all together and ask yourself, when liquidity returns, who wants to be caught flat-footed? This is why the timing of the Vanguard and BOA pivots matter. This is why Wall Street FUD comes first, and approval comes second. They shake the tree, they scoop up supply, then they open the gates. I hope you didn't fall for the shakeout. Now let's talk strategy. Yesterday, Chairman Michael Saylor announced a $1.44 billion USD reserve, enough to cover dividends on their preferred shares for nearly 2 years. People tried to spin this as Saylor backing away from his Bitcoin thesis, but in my humble opinion, that's nonsense. Strategy started their BTC accumulation in 2020 with $500 million of melting cash. Today, they have 1.44 billion in cash reserves, backed by 650,000 Bitcoin, and a capital stack strong enough to survive anything short of nuclear winter. This wasn't a hedge against Bitcoin, this was a hedge against forced selling. It tells Wall Street, we don't need to sell Bitcoin at the bottom, ever. Everything we've discussed so far matters. The flash crash, the forced unwind, the institutional capitulations, but it's all downstream of something much bigger. Because the most important thing that happened this week from a narrative perspective wasn't in the price chart. It came from two people who shaped the technological frontier: Elon Musk and NVIDIA CEO Jensen Huang. Both independently described energy, money, and Bitcoin in ways that, maybe accidentally, point directly to the next phase of the Bitcoin thesis. And if you're watching this channel, you already know that's where things get really interesting. Let's start with Elon Musk.
What do you think money will be in the future, Elon?
I think long term, I think money disappears as a concept. Honestly, it's kind of strange, but in a future where anyone can have anything, I think you no longer need money as a database for labor allocation. If AI and robotics are big enough to satisfy all human needs, then money is no longer, its relevance declines dramatically. I'm not sure we will have it. So, the best sort of imagining of this future that I've read is from Ian Banks, the culture books. So I recommend people read the culture books. In this sort of far future of the culture books, they don't have money either. And everyone can pretty much have whatever they want. So there's still some fundamental currencies, if you will, that are physics-based. So energy is the true currency. This is why I said Bitcoin is based on energy. You can't legislate energy. You can't just, pass a law and suddenly have a lot of energy. It's very difficult to generate energy, or especially to harness energy in a useful way to do useful work. So I think that probably we won't have money, and probably we'll just have energy, power generation as the de facto currency.
Elon is circling the right idea. You can't legislate energy into existence. You can't print jewels. You can't mint electricity because a committee votes on it. Energy is the most objective unit in the universe. But here's where Elon stops short. He says money goes away and energy becomes the de facto currency. Maybe in some utopian future where AGI handles every coordination problem and material abundance is trivial. Maybe. But in the world we currently live in, humans still need a communication, coordination, and settlement layer. We need money. We just need honest money. And the only way energy becomes a monetary foundation is through the thing that already converts energy into incorruptible value. You guessed it, Bitcoin. Bitcoin is energy priced in a global ledger. It's the accounting system Elon is describing. In the clip, he even admits Bitcoin is energy-based, and thus closest to this energy currency. He just hasn't taken the final step yet. Now, Elon's comments were from this week, but I want to jump back to a clip from September 2024, because a year before Elon said any of this, NVIDIA's Jensen Huang explained Bitcoin's energy function almost perfectly in a response to a question from the audience.
A lot of power producers, energy producers, the excess energy, they allocate that to Bitcoin mining because there's a very clear market there, kind of one-to-one financial market there. Do you see something like that possible in terms of like a smart grid, or like having those companies be able to dedicate some of that excess energy to training models and providing that power to?
You just gave a current example of excess energy being used to convert to store that energy. Essentially what Bitcoin is doing is taking excess energy, storing it into a new form. Mm-hmm. It's called currency. Right. And you take that currency and you take it wherever you like. And so you took energy from one place and now you've transported it everywhere.
What Huang describes is the missing link in modern economics. Bitcoin is the first technology that lets energy be stored, moved, priced, and monetized globally without losing fidelity. AI needs compute, compute needs energy, energy needs storage and monetization, and Bitcoin is the bridge. Bitcoin miners take wasted, stranded, or excess energy and turn it into portable economic value. And that value can move anywhere in the world with perfect settlement finality. This isn't a metaphor. This is thermodynamics. And long before Bitcoin existed, people were already imagining a monetary system rooted in energy rather than politics. Buckminster Fuller talked about this repeatedly, the idea that the future would need a money backed by kilowatt hours, not governments. He believed civilization would eventually move to an energy-dominated currency because it was the only unit with real universal truth in it. And Henry Ford, over 100 years ago, was even more blunt. He proposed replacing gold with an energy currency, a system where money represents real units of power. Ford argued that if nations priced money in energy rather than metal or debt, it would make war not only costly but impossible, because no government could print or manipulate the supply. Now, neither of them had the mechanism to make that system work, but Satoshi did. Bitcoin is the first monetary technology that actually realizes the energy-backed world these thinkers were pointing toward. A currency grounded in physical reality, not political decree. When you finally understand that Bitcoin must consume energy to enforce scarcity, you realize it's not a bug, it's the feature. It's what keeps the system honest. Energy is what prevents double spending. Energy is what prevents counterfeit supply. Energy is what prevents political manipulation. Bitcoin isn't using energy, Bitcoin is anchored in energy. And that's why Elon and Jensen are drifting towards the same conclusion. And over the last few months, something extraordinary has been happening on the energy side of Bitcoin. And almost no one outside the mining world is talking about it. The network quietly pushed past 1 zettahash earlier this year, an unimaginable milestone even 5 years ago. And instead of leveling off, it just accelerated, adding another 100 exahash in just a few weeks. Difficulty is already jumping up again, and all signs point to it climbing even higher. In plain English, the amount of real-world energy pouring into securing Bitcoin is growing at one of the fastest clips we've ever seen. This isn't hype, it's not sentiment, it's physics. It's the kind of scaling curve you only see when a system is moving from niche technology to foundational infrastructure. It tells you something permanent is being built, and it's being built fast. We're witnessing the energy backbone of the future monetary system assemble itself in real time. Now let's tie all this energy talk back to the charts. The Bitcoin Energy Value Oscillator, which maps price relative to the energy securing the network, has only hit its bottom band a handful of times. In 2012, 2015, 2019, 2023, and right now. Every single time it's bounced from these levels, a generational bull run followed. And we're bouncing again. And unlike those past cycles, energy use, hash rate, institutional allocations, and macro liquidity are all pointing upward together. That combination has never happened before. All signs point to this not being just another cycle. This could be the beginning of a structural transition. And if you're someone managing real capital, whether it's family money, business treasury, or long-term generational planning, positioning into that transition matters. Not with emotion, not with leverage, but with a plan. That's why I always point people towards Swan Private. Swan Private helps families and institutions build actual Bitcoin strategies, secure multi-signature custody, along with inheritance, tax, and full treasury planning. The stuff most people only think about after they need it. So visit swan.com/nosecondbest to learn more and set up a chat with a member of the Swan Private team today. We opened this episode with a flash crash, but we're ending it with something far more important: clarity. In the span of a single week, Vanguard's walls came down, Bank of America bumped their Bitcoin exposure, QT finally ends, rate cuts are now on the table, Wall Street is spinning up structural notes, and the very people shaping the future of technology are openly describing Bitcoin in the language of energy. Behind the noise, the fundamentals are screaming. Hash rate is vertical, the energy backbone is expanding faster than ever. And Bitcoin's energy value oscillator is bouncing exactly where it has before every major expansion. The world may not want to admit it yet, but it's drifting towards the truth you and I already know. There is no second best money. So what do you think? Is the shakeout really over? Do Elon and Jensen understand just how close they are to the Bitcoin endgame? And how do you see the energy narrative shaping in the next leg of the cycle? Drop your thoughts in the comments, hit the like button if you enjoyed this one, and share it with a friend. And make sure you're subscribed to the Swan Bitcoin channel so you don't miss the next one. Thanks for watching, and remember, there is no second best money.